Mr. Raghu, hi, good morning. Now, the RBI has proposed to reduce risk weights for individual housing loans, and these are applicable to lower value but well collateralized housing loans as well. How positive is this for housing finance companies like yours?
Well, this move is definitely a positive move as far as the low-cost housing units are concerned. Since we have sizable exposure in the rural and semi-urban areas, this will give benefit to us on the capital, which can be passed on to the borrower. This is a very good move by the RBI. It's a surprise move also to announce that they will reduce the risk weights for low-cost housing.
What is your average ticket size, and by how much will your capital requirement and yields come down because of the reduction in weights?
Well, my average ticket size has been around 12 lakhs of rupees as at the end of March 2015. Probably it will remain on that zone more or less during the current year also. We expect that. And since we already have a comfortable capital adequacy ratio, and without doing the proper calculation, the numbers, I don't think I'll be in a position to give you exactly how much benefit we get on the capital or how much hit we'll take on the spreads. It'll be too early probably to judge that.
Let's understand the implications of a 50 bips rate cut in terms of demand. Do you think such a sharp rate cut and transmission of this could have a huge impact on the housing demand? Do you think the home loan buyers are sensitive to 50 bips, 75 bips? Are they that sensitive?
Well, I think the low income households are, the interest rate sensitive is felt there, and normally during the festive season, the demand for housing loans picks up, and with this reduction in 50 basis points at one go, we expect the demand to pick up during the festive season now.
My next question is that now that directionally interest rates are headed lower, then interest rates will only come down. Banks will find it cheaper and easier to borrow from the wholesale market, which means they will be in a position to offer competitive rates, better rates. That could be business loss for you.
No, I don't expect the business loss because we have a separate target group for funding. And even if they are going to lend, the problem is that, for small ticket size loans for the banks, it will add to the cost of operations. And already with the pressure on the spread, how much of that, will get realized into the real estate loans. I think banks also should feel comfortable in bulk lending to the housing finance companies. And to that extent, we feel that the competition may not be there. But yes, competition is expected to some extent.
I just wanted a sense from you, sir, how much of your existing portfolio would be loaned out on the fixed loan basis? Because with the kind of rate cut trajectory that we are in, and the way the rates have come off in yesterday and probably going ahead as well, all of this would ideally lead to substantial margin expansion for you as a company.
Well, all my loans are floating rate loans. All the housing loans are all on floating rates. So the borrowers also will expect some reduction in the rates. So it will depend on how much reduction we are going to have on our cost of funds and how much of it we would like to pass it on to the borrower. Probably we'll take a call on that once we have a clear picture from all the banks from whom we borrow the money. When they do their, the transmission, interest rate transmission, we'll have a clear picture on that.
Just to clarify this, which is why I was asking how much is floating and how much is fixed. If all of it is floating, and let's say hypothetically your cost of funds get reduced by X percentage, are you saying that you will not pass on the entire X percentage to your borrowers?
That's why I said, it depends on it could be X or it could be X, a certain percentage of X. The ALCO has to meet and then take a call on that. A clear picture will emerge only after we know how much is going to be the reduction. And we'll also like, sort of keep the spread which we have been having so far. So we'll take a call on that as to how much we can pass it on to the borrower. So for example, let me quote that. I think these are published figures. During the first, let's say the 6 months of the calendar quarter, January to June, the banks have passed on about 30 bips to the cost of funds for us. And we have passed on almost 23 basis points of that to the borrowers.
But in the short term, while you migrate from a higher loan trajectory to a lower loan trajectory, the effect, can that impact your NIMs? Because you have to pass on the benefits immediately to customers or to borrowers. and by the time your yield curve will normalize, it could take maybe a quarter, it could take more than a quarter.
Well, that's why I said now these the NIM and all will have a lagged effect, and we expect probably, since there is a reduction in the cost of funds which is getting passed on to that, the current NIM levels should be maintained.
Okay. One final thought really, a lot of people are now believing that property prices too have come off substantially and will probably stabilize or probably move up from these levels, and starting this festive season the demand at large for housing will come back with a vigor. You obviously have a lot of experience with regards to this because you are one of the premier housing loan companies. What are your thoughts really? And do you think business at large moving up over the course of the next 2 or 3 quarters?
Well, usually the second half of the year, now we have almost come to the end of the first half of the year. Second half of the year always see a larger growth than the first half. So, and with all these reduction and the property prices stabilizing, we expect the demand to be more during the second half of the current year when compared to the previous years.
Okay, Mr. Raghu, good chatting with you. Thanks much for taking the time out and speaking with us today.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.